Hello traders, and welcome to another video. It's been a minute, but I want to quickly discuss with you what I'm seeing in Bitcoin at the moment, and let's just do some quick technical analysis on Bitcoin as well. So I'm just gonna quickly plot the recent swing highs and lows on this chart. As you can see, this is a weekly time frame for Bitcoin. So I'm just going to plot this all-time high over here with a simple horizontal line here on TradingView. So let me just get the cursor there. There you see. So we had an all-time high of, let's say, 65,000 Rand for Bitcoin, and then we dropped to about let's make it 30,000 Rand. So that's a massive drop this past few weeks, and as you can see, we are not out of the woods just yet. So it's a bit difficult right now to know for certain whether we are in a bull or a bear market without giving it some time to play out and firstly doing some technical analysis. So I'm just going to quickly draw a Fibonacci retracement levels from this swing high to the swing low. So over here from the swing high all the way down to the swing low. So as you can see, we moved from 65,000 to 30,000, and we are steadily approaching the 38.2% Fibonacci retracement level, and this is happening relatively slowly. So 1, 2, 3, we are in the 4th week now, and we're not even back to the 38.2% Fib level. So this is also a very good possibility that we are in a dead cat bounce scenario over here. So a dead cat bounce is basically just a continuation move to the downside. So what you usually can expect from a dead cat bounce is after a rapid lower move like this, you expect a bounce or a retracement higher to one of these two Fib retracement levels. So it's usually between the 38.2 and the 50% Fibonacci retracement level. So as soon as it hits one of these levels, you can expect a move even lower. So a quick target based on the weekly time frame is maybe something around the 20,000. But let's keep in mind, this is Bitcoin, this is crypto, this is the year where meme stocks are pumping, so anything can happen. I can tell you it's going to 20,000 and it can just rally higher to 100,000. I don't know, nobody knows. So if someone tells you we are still in a bull market, then just take it with a bit of salt, because nobody can tell for certain what the market is going to do next. So that's the weekly time frame. So let's go to the daily time frame. So I like to begin with a big time frame and then gradually go smaller and smaller. So usually from weekly, daily, 4 hour, hourly. I don't usually go lower than 1 hour because I like trading. I like taking swing trades. So that is usually a couple of days to a week. So the 30-minute, 15-minute time frame isn't necessary for me. Okay, the 1 day time frame. What do we see over here? So these two moving averages are the 50 and the 100 moving average. So as you can see, the 50 moving average crossed below the 100 moving average. So let's just quickly highlight that. So this crossover over here, let's just quickly make that visible. So this crossover took place around 28 May. So this is basically another bearish sign, because whenever your smaller moving average is trading below your bigger moving average, you are in a downtrend. So that's what's currently happening at the moment. So keep that in mind. So let's quickly zoom out a bit and go back in time a bit. So to around this move over here. So as you can see, for the more experienced traders, we were ranging in a sort of rising wedge for the longest time. So let me just quickly draw this rising wedge over here. So this is just a rough rising wedge. So from let's say mid-Feb to mid-April, so a good 2 months basically. We were trading in this rising wedge, and as you can see, we broke out of this rising wedge over here. A downward move followed. We came back, made a quick retracement, and then just a massive sell off to the downside. So usually when you break, this is also a trend reversal pattern, rising wedges. So usually when the price breaks out of it, there's quite an aggressive move that follows. So that was the first indication. Then we can also plot some trend lines. So for connecting, let's connect these two tops over here, and we are just going to copy and paste that same trend line, and we are going to be connecting. So where does this fit in the best? So probably around here, connecting. So you connect these two peaks, and then you copy and paste that same trend line, and you connect these values over here. So as you can see, we are currently trading above over here, above this downward trend line. So that is maybe our first bullish sign, but we are basically just touching this 50 exponential moving average. So again, that is another bearish sign. So there's a lot more bearish signs at the moment, but let's just keep going. Nothing is confirmed yet. So I like to indicate the different psychological levels on the screen for myself, because psychological levels are extremely helpful to assist your trading. So for Bitcoin, I'm just gonna, let's do 3 or 4 psychological levels. So the most recent one is, let's say, $30,000. So go to your coordinates, type in $30,000. So this is a psychological level that you can see. So Bitcoin just touched the psychological level, and these psychological levels can act as an area in the market where a lot of orders are awaiting to be filled. So there's a lot of retail investors or larger institutions that went long over here at the 30,000, and as you can see, the price showed just what happened afterwards. So it made around $10,000 increase from that touch of the $30,000 psychological level. So I'm just going to copy and paste these levels and just continue editing them. So the next one is 40,000. So as you can see, we are just currently trading around the 40,000. So this is quite an important psychological level for the price. So if the price is going to reject this 40,000 psychological level, then there's a good chance that we can retest this downward trend line, maybe then continue higher, or we can just continue lower to the 30,000 and even break the 30,000 and head lower to the 20,000. So I'm just going to add another psychological level. Let's make it the 35,000. So it doesn't have to be in tens, it can be in, I like to stick with variables of 5 or 10 usually, and then let's just make the 45 one. That's also a good one. So you're just gonna plot the more recently tested psychological levels, because the 65,000 above here, it's not gonna affect us at the moment. So we are currently ranging in this let's make it the 30 to the 40,000 area. So as you can see, we are just consolidating in this little area. So usually after consolidation like this, usually a consolidation means the trend is going to continue. It's usually a trend continuation, most of the time a trend continuation chart pattern. So what's likely that can take place is we are going to be rejecting this resistance area at the top of this consolidation rectangle over here, and then we can just continue moving lower. But that's just my 2 cents. Again, anything can happen in the market. I can go to bed and I can wake up and we can be at 45,000. In a week we can be at 50,000, and it can just go higher like this. Anything is possible, so just keep that in mind. And it's also very important to note that if someone on YouTube, myself included, tells you this is a good area to buy, then please don't buy. Do your own research, and if you decide to buy based on my video or someone else's opinion, then always only invest or trade with money that you're comfortable losing. So I only play with money that I can afford to lose. If I get wiped out tonight, my life isn't going to change. I'm just going to continue with my life. Luckily I have a day job, so that brings in some income for me. But like I say, don't risk the farm on one trade. Rather, it is exciting to be a part of it, but always implement appropriate risk management, and don't invest your entire pension fund or all of your savings into anything for that matter, not necessarily Bitcoin, but especially not a meme coin like Shiba Inu or Doge or something that doesn't really have any fundamental backing. So let's move on. So as you can see, price is just consolidating in this box. So this is also a question that, or this is also an indication that we don't really know where price is going. So this isn't a good opportunity to buy, because we are just consolidating. So you can buy here, and then after a few weeks price is over here, then you're going to be kicking yourself. So I would just really sit on the sidelines for this one, just to get a better indication of a better entry. So you would rather go with the momentum higher than be investing or trading in a consolidating move like this. So we need confirmation that we are again still in an uptrend. The next move is still higher, and some few indications can be that this 50 EMA crosses above the 100 EMA again, or that we just continue to make higher highs and higher lows. So the market just continuing to go higher and higher. So all of these scenarios can play out. So if you don't just want to sit on the sidelines and you're eager to get in, then I highly recommend you just dollar cost average in. And again, don't dollar cost average with a lot of money. Let's say you want to invest 5,000 Rand, or for my non-South African viewers, let's say you want to invest 1,000 US dollars. So you're gonna, let's say you split that up into 5 months. So then for the first month you only invest $200, let's say over here. Let's just make this a bit thicker. Over here, $200. The next month, $200. Let's say it moved up a bit over here. The next month it maybe come a bit lower over there, higher. So this is dollar cost averaging, where your average price, instead of at the current market price, instead of investing, let's say $1,000 at $40,000, now over the period of 5 months, you've invested the same amount, but your average price for your same Bitcoin amount. So this is definitely a lot safer. But the same thing can happen to the lower side. You can get a much better entry after 5 months. This is your average, let's say average entry then after 5 months. So you don't know these things. It can go down, it can go up, but the safest bet is always to just dollar cost average, especially if you're investing for the long term. But let's be honest here, the majority of people that are into crypto at the moment just want to get overnight gains and want to retire early and want to get those 500%, 1000% returns. I'm one of them, I'm not going to lie, but I also really love the fundamentals of crypto, and it's here to stay. I believe it's here to stay. So I tend to dollar cost average and then maybe take a more riskier trades, but again, only take the trades that you can afford to lose. So that is just my 2 cents on Bitcoin. Just to sum it up, we aren't in a clear downtrend or uptrend at the moment. and anybody that tells you otherwise, yeah, take it with a pinch of salt, do your own research, and again, always dollar cost average and invest with the money you can afford to lose. I know it's boring advice. You just want me to tell you to buy, go all in, risk the farm. I know it's very boring advice, but I'm not a financial advisor. I can't tell you to do anything. So just use this video as educational purposes. So that is Bitcoin from me, your local trader, and I'll see you guys in the next video. Take care.